Man, am I glad you all showed up to hear this life-changing information. When it comes to saving, you have three options. 1. The bank. Most of us, when we get a paycheck, we are taught to deposit it where? The bank. Why? Because it is safe, right? But the challenge with the bank is, you do not earn compound interest, and you get extremely low rates of return. The national average interest rate for savings accounts is 0.06%, according to Bankrate's June 30, 2021, weekly survey of institutions. If you were earning 6% through a bank account, at the end of the year, you earn $600. But if inflation is at 3%, you make $600 and lose $300. How much did you make? $300 that year, and $300 the following years, that you allowed the money to remain in the bank. But bank savings rates are way below 3%, so you're not even beating inflation. For every year that you leave your money in the bank, your money will continue to depreciate exponentially. Wow! That was depressing. Let's look at savings option number 2. Here are the outdated retirement accounts. Baby boomers, and now others, invest in a 401k, 403b, IRA or Roth IRA. Why? Because they have the potential for higher returns. But the challenge here is you also have risk. Before you say I am still young enough to take a big economic loss, I can make it up. Remember, a bird in hand is worth 20 in the bush. What if you could participate in the gains of the market without taking on any of the risk? With the investments above, you cannot touch your money until you are 59 and a half, or you will pay a 10% penalty. To make matters worse, with the IRA, 401k, and 403b, you must begin to take withdrawals before the age of 72, or you will pay a 50% penalty. Now, imagine, after saving for 50 years accumulating $750,000, then losing half of that as a tax penalty, because you simply weren't informed. If you decided to invest $500, at 8% interest, compounded over 30 years, which would give you $750,000. There are two ways you can access this money. The first way is a lump sum. This could potentially put you at around a 31.59% tax bracket, including any penalties. The tax on $750,000 is $236,928.75 that you are potentially paying in taxes, leaving you with $513,071.25. The second way you can access your money is through installments or payments. You begin taking out 10% per year on $750,000, which would give you an income of $75,000 per year. If you make $75,000 a year living in some regions of California, you will be taxed $20,168. That means your net pay will be $54,832 per year or $4,569 per month. At this point, many people will use the Roth IRA as a rebuttal. The Roth IRA is a tax-advantaged option, but it has some limitations. You can only contribute a maximum of $6,000 or $7,000 if you are age 50 or older to a Roth IRA in 2020. Single tax filers must have a modified adjusted gross income, MAGI, of $139,000 or less. If you make more than that, then you cannot contribute to a Roth IRA. In 2021, the income limit rises to $140,000. If married and filing jointly, your joint MAGI must be under $206,000 in 2020 and $208,000 in 2021. Even though the Roth IRA is a tax-free plan, there is still no downside guarantee to protect you against market crashes. The savior of all retirement accounts. The tax-advantaged option, which we recommend, is the IUL, which stands for Indexed Universal Life. The IUL is an insurance product which gives you the tax-free benefit of the Roth IRA, without the exclusions based on income or the limits on the amount of your monthly contributions to your account. The IUL also gives you two forms of growth. You have your insurance and your cash value. 1. The cash value is the face amount of the life insurance you purchased. If you qualified for $750,000 in coverage and you decide to pay more than the premium cost, anything extra would go into your cash value account. As an example, putting $500 per month by 12 months equals $6,000 per year, times 30 years, equals $180,000, which you will have paid into your $750,000 death benefit. 2. At the same time, your cash value is growing at a compound interest rate of 8%, compounded daily, over that 30-year period. The IRS says, if you attach a savings to your insurance, you can access that money tax-free. The savings is the cash value. With paying into the IUL over 30 years, you can increase your monthly income by $931 to $5,500 per month, while reducing the amount of your annual withdrawals by $9,000, and allowing that $9,000 to roll back into your account. Tax-free. The IUL is a permanent policy which gives you coverage until age 120. With the IUL, your money is invested in an account where the performance is based off the performance of the S&P 500. The S&P 500 is a group of the top 500 companies in the US. Other benefits of the IUL are if someone decides to sue you, they cannot touch this money. If or when your children go to college and apply for financial aid, the IUL is not considered an asset, and will not interfere with them qualifying for financial aid. In addition to offering more liquidity, the IUL also offers a no loss guarantee. Unlike the 401k, 403b, IRA, and even the Roth IRA, which can all lose money when there is a downturn or crash in the stock market. The IUL has a built-in floor, meaning, when there is a downturn or crash in the stock market you will not experience any loss, the insurance company will absorb the loss. That is also why, if the market outperforms and rises to, let's say, 26% or greater, you will receive your 8%, but not the windfall. The insurance company will use those funds to recuperate the downturn losses and have a reserve against the next downturn. Remember, in the bank you pay taxes, in the IRA, 401k, and 401b you pay taxes. Placing your money in the IUL allows your money to grow tax-free. And your money can be accessed tax-free. They say with knowledge comes responsibility. The questions you must ask yourself are these. How much of your money do you want to lose? How much of your money can you afford to lose? Would you rather pay taxes or not pay taxes on your retirement? Would you rather have the no-loss guarantee of the IUL or no guarantee? Would you rather your loved ones be taken care of or not, if the unthinkable were to happen? Which option sounds best to you? Unless this presentation failed to accurately share the information, the only challenge is, you must qualify. Here is what you need to do. Get with the person who invited you to review this information. He or she will set up a Google meeting or Zoom-type video call to go over the paperwork ASAP. Then, he or she will have an examiner come visit you to do your blood work, and from there, it will take around 30 to 45 days to get you qualified. He or she will need your driver's license, an avoided check. He or she will need the name of your spouse or significant other, and the names and ages of any children. During the 30 to 45 days, about 1.5 months, no premiums will be drafted from your account. Once your policy is issued and in your hands, the first premium will be drafted from your account. Yes. Policies with a lower cash value than the $750,000 are available. Yes. An IUL can be started with as little as a $100 monthly commitment, and the monthly contribution can be increased at any time. Yes. To maintain your IUL, you must pay the agreed to monthly premiums. I will answer some questions many people want to ask. Yes. It is true, the IUL has a terminal illness rider. For stroke, heart attacks, etc. Yes. It is true, the IUL has a disability rider. In case, the client cannot perform 2 out of 6 daily living activities. Yes. It is true, the IUL has a critical illness or critical injury rider. For events such as serious illness, car accidents, or major injuries. Yes. It is true, the IUL has a guaranteed insurability rider to guarantee insurability for the client if the policy lapses. Yes. It is true, the IUL has an additional child rider to add a child as an insured under the parent's policy. You will want to immediately contact the person who thought enough of you to share this presentation with you. Until then, you are burning daylight with your financial future. Contact us to schedule your free no-obligation consultation. That insurance service, where our client's principal is guaranteed never to be at risk. Visit our website and follow us on social media.